A global game of musical chairs. What am I referring to, and how can this analogy actually help you build your wealth and also lower your risks? So in this video, I'm going to talk about musical chairs. We probably all played this game, at least if we're from somewhere in the West in particular, as children. And how does this game actually help us understand the global economy in some ways? And that's going to be the topic of today's video. Now, before going into the details of today's topic, go over to adamfire.com, especially if you're an expat or a high net worth individual. See how I've helped people probably just like yourself in the past on my website. Now, what do I mean by musical chairs? Now, if we look online at global GDP growth from, say, 1945 until today, we can see numerous trends. So it is true to say that after the Second World War, growth was kind of higher in many countries around the world because there was more to grow, basically, because of the Great Depression and Second World War and so on. But after 1970, what's quite extraordinary, if you look at the data, is that global GDP growth, at least adjusted for inflation, has been relatively similar from decade to decade. So if you compare the growth from the 1970s to the 1980s, whilst it's true that individual countries did better in the 80s and the 70s and vice versa, the global growth rates were relatively similar. Likewise, the growth rate in the 1990s was similar to the 1980s, and the growth rate in the 2000s, despite what happened in 2008 and 2009, was similar to the 1990s. And the growth rate from 2010 until 2020 was relatively similar to the previous decades. And it's quite surprising in some ways, because you would think that in the 70s and 80s, when the global economy was smaller and population growth was going higher, that basically the growth rate would have been much higher than in more recent times. But in a way, it makes sense, because if you think about it, in the early to mid 70s, many of the world's economies, like China and the Soviet Union and so on, were not, really performing well to their potential because of the political regimes, the extreme political regimes that existed. Likewise, in the 70s, there were problems like the oil price spike, but other countries did incredibly well, like Saudi Arabia and the oil-rich countries obviously had a boom in the 70s. And we can see that trend every single decade. In every single decade, there are countries and regions that do well, do okay, and do poorly. And then there's always a minority of countries that completely collapse and kind of go into ruin. So for example, if you speak to most British or American people, they'll say, oh, wow, the 1990s, it was such a good time. It was stable and, things seemed different then. Like if you go on YouTube, you'll see like people watching videos of the millennium in the year 2000. They'll say things like, wow, it was such a nicer time. But in the 1990s, there was the East Asian financial crisis, which harmed South Korea and the East Asian region. There was the Latin American, or one of the Latin American debt crisis. I think there were two or three in the 80s and 90s. Russia had a very difficult time after the fall of the Soviet Union. Japan had a difficult time. Germany had a difficult time after reunification. So the point is, just because we're doing well or our region that we're living in is doing well doesn't always mean that another region is doing poorly. Likewise, in 2010 or 2011, one thing that struck me when I was traveling around the world was how, even though the UK seemed to be struggling a little bit, when I went to countries like Brazil, for example, I've only been to Brazil once, but I went in 2011, it was booming. The Brazilian real was close to parity against the dollar. People were thinking about moving it to Brazil. Obviously, that's changed now. Brazil hasn't done so well in the next 10 years, but that's kind of my point, that it's always kind of a game of musical chairs, that because global population's going up and technological developments are always improving, even though there are sometimes global recessions, over a period of 10 years, usually the global economy actually gets much bigger. So even a 2 or 3% growth rate compounded is often 25 to 35% growth in our 10 years time. And I don't see that thing changing for quite some time. There's a debate in a few decades' time when maybe global population goes to negative. We're seeing declining populations and falling populations in China now, that this could change. But at the end of the day, in the next 10 years, I see no reason why the global GDP adjusted for inflation will be not much higher than it is now. And likewise, from say 2030 to 2040, I think the same thing. It's always very hard to predict in advance which countries are going to do well and which countries are going to do badly. So many people got the BRIC countries wrong: Brazil, Russia, India, China. 10 years ago, almost everyone thought all those economies would do well, and that hasn't happened in the case of 2 or 3 of those countries. So we never know for sure which countries are kind of going to do well and do badly, which kind of brings me on to something, and that's that when you're looking at private investments, whether that's your own business or investing in somebody else's business, or for that matter in the stock market, it's always much better to focus on regions or companies that are globally diversified. I'll give you an example. The United States stock market is one of the most, if not the most, globally diversified stock market in the world, because you have companies from around the world doing IPOs in the US. And let's face it, look out your window now, you might be able to see a Starbucks or an Apple store or, I don't know, a Coca-Cola can somewhere. Many American companies are actually just global companies now. So as long as the global economy is growing, those companies can grow too. It only takes a few IPOs from the emerging markets and a few big multinationals to do well from the world economy for the US stock market to do well. In comparison, if you invest in a very localized stock market, like you buy, I don't know, the Vietnamese stock market, which can make sense. Like, for example, right now, I think it still looks very undervalued for this year. But long term, obviously, it is more risky to buy an individual stock market index, even if it's an index and not an individual stock, if it's quite a localized play. And some stock market indexes are quite localized, even when it comes to small caps. Like, for example, the FTSE 250 in the UK, the top 250 UK firms, it's done much better than the FTSE 100 over the last 25 years, but it's a more localized index than the FTSE 100. Not completely, but more localized. So in some ways, it is more high risk. And the same thing with private business. I can remember many years ago when I started going completely remote, when I started my own business 5 years ago. One of the biggest reasons, in fact, the biggest reason I actually went remote, well, there was actually 2 reasons really. One was I saw people were going to go online more and more and more. But number 2 is to diversify my business, because I knew that it's very hard to predict which regions will do well. And I saw so many people moving around the world, whether they were lawyers or real estate agents or whatever business they were in, or advisors or whatever, trying to find the best region. And I just thought, you know what? If I go online, if I have an international global online model servicing high net worth and expat clients, at the end of the day, the world economy is going to grow. The number of expats and nomads is going to grow. The number of wealthy people is going to grow. And that's the way I look at things also as a business owner. In the next 10 years, I don't know which regions for sure are going to grow, but I do know 4 or 5 things. A, the global economy almost for sure is going to grow, even if individual countries go into recession, and even adjusted for inflation. 2, global wealth is probably going to increase in the next 10 years. 3, global population is going to increase in the next 10 years. 4, the number of people doing things online is going to go up in the next 10 years. And 5, the number of people who prefer to do things in a remote way, or because they're digital nomads or expats or whatever, that's also going to go up. So at the end of the day, as a business owner, I don't think it's my job to predict, oh, there's going to be more expats or high net wealth individuals in Vietnam or the UAE or whatever. My job is just to look at the macro trends, the big trends, such as more people are going to go online, more people are going to be in the world because there's going to be more, population growth. There's going to be more huge inheritances because of, the baby boomers passing away and so on. And I think when you're looking at private investments as an investor as well, it's better to look at those big macro trends. Because if you look at the small detail, the problem is they can sometimes, I'm not saying small detail doesn't matter, but sometimes they can swallow you up. A lot of people do a lot of detail analysis about, is the Vietnamese or the Cambodian economy going to do well? In which case, what individual stocks are going to do well? But the problem is when you start to look at those micro details, there's so many unknown variables, unknown unknowns and known unknowns, that you can get your fingers burnt more easily. Whereas if you just look at the big macro picture, I'm not saying that there aren't risks. If there's a nuclear war, obviously, or third world war or whatever, a lot of the things I said would not be true. Likewise, if there's a huge pandemic, much worse than COVID, the global population could fall. But barring one of those kind of black swan events, which, yeah, a huge black swan event, basically all the things I just said then, almost for sure will be true. If you look at this video in 10 years' time, almost for sure you'll say, well, you know what? Global population went up, global GDP went up, global wealth went up, and so on and so forth. So at the end of the day, when you're a private investor, whether you're investing in public stock markets, your own business, or indeed private businesses like private equity or whatever, I would strongly say that with the bulk of your portfolio, it's lower risk and likely to be actually, in some cases, better returns if a company is able to have a global model that isn't actually only focused on one or two countries and not just one region. You know, because think about what's happening now and in the last year or two. I've traveled a lot in the last year because I was catching up a little bit with the COVID period, right? I used to travel a lot and then COVID happened, and then obviously that changed. And what's become interesting in the last year is some of the countries I visited, like the UAE, Cambodia, booming. Some of the countries like Thailand were just doing, you know, okay. Korea as well. And then there's some countries like the UK that are struggling. And obviously, if I would have visited Venezuela or Iran or something, they're in crisis, right? And that's the point I'm making with this video. There's always going to be kind of this musical chairs. In another 5 or 10 years, you know what? We might be surprised. The UK might be growing very strongly. It was only in 2013-14 that the UK was growing more strongly than other European countries. America might be growing strongly. China might be. We don't know in advance. But what we do know is more global GDP almost for sure is going to come in the next decade, and indeed decades, next 2 or 3 decades, even though there will be global recessions and bumps across the road. So when you're looking at the media as well, always bear this in mind. Like, for example, some of the fear-mongering articles, like I saw one fear-mongering article which said, the IMF have said that 30 or 35% of economies this year will go into recession. But what does that mean? First of all, it means that not all those countries are going to stay in recession for the whole year. That could mean they're in recession for 6 months and come out of it. Second of all, that means that about 65% of the world's economies won't be in recession, and probably about a third of those 65% will be absolutely booming. So what's going to be the results? Global GDP this year, adjusted for inflation, is probably going to go up by about 2% or so. It might be higher, it might be lower, but essentially it's not that different to any other year. And again, going back to the initial point, I think global GDP growth in the next 10 years is probably going to be about the same as the last 10 years. So always look at the big picture, the macro picture, and don't feel too pessimistic or optimistic just based on the local situation. Too many people, they just think about the local situation. Like if you're in Europe now, you see many countries struggling, Russia, UK, mainland Europe or whatever, but that doesn't mean that the world is all struggling. There are some parts of the world where it's absolutely booming right now. So always bear that in mind when it comes to investing.
Depends on every person's individual goals, how much money they want to invest, how long they want to invest. And I did not have at all the feeling from any bank with which I had contact with that they were interested in these things. Mm-hmm. Whereas with you, it was from the very beginning obvious to me that you had experience in these matters and also were interested in what I wanted to achieve. Anyways, I'm very, very pleased and positive to say that I believe I've picked the right one. The results in the last couple of years have overreached my expectations by far. And I see no reason why it should not continue. Of course, I can highly recommend him as your financial advisor for now and for the future, because hesitating is missing out.
So I'm investing a lot in the Middle East market, but the amount of returns I'm getting from there is very low as per the amount of returns I'm getting from the investment portfolio which you made for me. Obviously, the best result in market right now is Adam.